Good afternoon to those tuning in from Europe, and good evening to those tuning in from India and parts of Asia. Welcome to the latest webinar series by IDEX Legal, where we focus on providing technical guidance to the lawyer community. I'm Vikas, Managing Director of IDEX Legal and your moderator for today. This latest series is in conjunction with international law firm Harrison Clark Rickerbys, HCR, and their India partner firm, India Law Alliance. HCR is an award-winning top 70 UK full-service law firm that traces its roots back to 1796. India Law Alliance was established more recently in 2004 with offices in Mumbai and Delhi, and they are a cutting-edge boutique law firm focused on dispute resolution and corporate commercial work. Episode 1 of this series was hosted in September and focused on the recent Arbitration and Conciliation Amendment Act 2021, which was passed into law on 10th of March of this year. You can view that webinar on the IDEX Legal YouTube channel. But today we go to a very different topic where we discuss something that seems futuristic, but it's become very mainstream conversation today. Cryptocurrency, decrypting, what it all means for Indian businesses. So join me in getting to grips with the nuances of cryptocurrency and what it means for businesses and India, especially given the government's recent announcement that regulation will be discussed in this winter session this year. Joining me, we have Kavisha Shah, Senior Associate of India Law Alliance. Kavisha has 8 years of litigation, arbitration, real estate, corporate and IPR litigation and advisory experience, handling complex works across multiple jurisdictions in diverse industries. Kavisha's experience encompasses commercial contracts, information and data management, bankruptcy, shareholder oppression and mismanagement, real estate litigation, documentation and media contracts. And she's heavily involved in drawing strategies for effective litigation management and conflict resolution for her clients, which range from startups to larger businesses. We also have Nicola McNeely, partner and head of technology, HCR. Nicola regularly advises on the legal and regulatory aspects of implementing blockchain technology for enterprises, working closely with startup and scale-up disruptors, as well as large corporates on new technology adoption. Nicola is also a council member of Blockchains Connected, a dedicated network for the blockchain community in Wales. She previously worked at the Royal Mint for 6 years, between 2013 and 19, helping digitize gold investments in blockchain, creating the world's first stablecoin for institutional investors, and works with businesses around the globe in the cryptocurrency, NFT, and blockchain space. We also have Nicolas Groffman, partner and head of the international team at HCR. Nicolas heads the international practice at Harrison Clark Rickerbys. He read Chinese at Cambridge before qualifying as a solicitor in 1999, then practiced law in Shanghai and Beijing for 16 years. He's a leading voice and writer on Chinese international transactions and was named as a key figure by Legal 500 for his corporate M&A work and for dispute resolution. He handled the first enforcement of a Hong Kong judgment in mainland China and is a frequent commentator on Chinese law and international relations. Welcome, Kavisha, Nicola, and Nicolas. So we're going to start, Nicola, with you, because you're going to help us demystify and figure out, what is cryptocurrency and why it's different from blockchain. So we're going to hand over to you first to kind of talk us through the distinctions between the two.
Thank you very much, Vikas, and thank you everyone for participating and joining us today. I'm just about to share some slides with you, so bear with me one moment. Hopefully you can see my slides. So what I'm going to do is talk to you about cryptocurrencies and blockchain and why there are so many myths about what they are, how they work and how they operate. So as Vikas mentioned, I've been working in the digital asset and blockchain space since 2013. I was engaged by the Royal Mint in the UK to work on what could potentially be the future of a central bank supported digital currency for the United Kingdom. And we started with an MVP product which effectively digitized gold. So what we were trying to do is to recreate the gold standard, but on a digital scale, and using blockchain technology before most people even knew what blockchain was and what cryptocurrencies actually were. So we were very early in terms of adoption and moving into the digital asset space, which means that I've been steeped in the world of digital currency and cryptocurrencies and blockchain for nearly 10 years now. So I'll talk you through today
if you want
a little bit about
share your screen again, Nicola, because we can't see the slide yet.
Can't see the slides, apologies. Okay.
That's better.
There we go. Let's start from the beginning. There we go. Can everybody see that?
Yeah.
Perfect. Okay. So we'll talk about cryptocurrency as a blockchain today, and I'll demystify it for you as best I can in the time available. I could talk for days about this, but I only have a few minutes, so bear with me. So a little bit about myself. I advise businesses on blockchain and cryptocurrencies day in, day out. So this is my full-time job. And I work with large corporates that need to adopt this technology, but also the smaller businesses that are creating the disruption to the market that is the blockchain market, and also helping people look at the future of payments, payment services, and digital assets in particular, so asset-backed cryptocurrencies and so on. So the big question: what do people think of when they think about blockchain? The first thing they think about is Bitcoin. Now, they are very different, and I'll explain to you why they are different. So blockchain is the underlying technology which is used for Bitcoin. So blockchain is a technology which is being devised using two different pieces of technology. One is distributed ledger technology, which has existed for many, many centuries. And distributed ledger technology effectively is different to centralized ledger. So I'll walk you through what exactly distributed ledger technology means. And also it's combined with a technology called cryptography or cryptographic keys. And effectively what that means is locking or putting keys on your assets to make sure that they're protected. So it's the symbiotic relationship between those two technologies that makes blockchain. So cryptographic keys have been used for many, many years and were used as part of used by the Germans in terms of their technology when they were encoding and encrypting messages in World War II. So that technology was actually decoded at Bletchley Hall. So that technology has been around for some time, but the mixture of cryptography with distributed ledger technology has only been around really since the white paper that was written by Satoshi Nakamoto, which created Bitcoin. So and Bitcoin is an application of blockchain technology. So for example, if you take an analogy, if you think about the internet would be the blockchain technology and the web page would be the Bitcoin. So you can't have the Bitcoin without the underlying technology being blockchain. So it's not all about Bitcoin. Blockchain technology has multiple different applications in multiple different ways, but Bitcoin or cryptocurrencies is one application of this technology. They're not synonymous. They're not, you can use blockchain technology without dealing with any cryptocurrency. So let's talk a little bit about money. So this is a £10 note from the Bank of England. And if you look really carefully at the center part, I have a note here. I'm just going to read it out and magnify it because my eyesight's not clear enough to read it. It says, I promise to pay the bearer on demand the sum of £20 or the sum of £10. And effectively what that is it's a promissory note or a guarantee or a means of exchange or payment from the UK government, from the Bank of England to the bearer of that note to pay that money or that money's worth. So that's what money is. This is money issued by the Bank of England, and it will pay the bearer the £20 or the equivalent of £20. That is a government issued currency. Cryptocurrencies can be government issued, or they can not be from government, not supported by government. So if they are government issued, they're digital currencies, or they're called central bank supported digital currencies. But currencies like Bitcoin don't have any kind of central authority or central issuing body. So they're not guaranteed. There's no minimum value to them. And there's no person that will actually underwrite them with a store of value or give you a payment in equivalent to that digital currency. So they won't give you the gold equivalent, for example, or the silver equivalent of that digital currency. But if they are central bank supported, then the whole point is, in the same way you would with this particular note, a central bank would underwrite it and would guarantee that the bearer would have the benefit of that amount of currency in whichever currency that it's issued in. So the Bank of England is effectively a centralised ledger operating the legal monetary system in the United Kingdom. And this is an example of a ledger. So it's a manual ledger, it's a centralised ledger, historic documents, what we'd be used to seeing as a central ledger. So what is blockchain? Well, blockchain is a synchronized, transparent, and decentralized way to validate and update records. It can be used as a mechanism to allocate property from one person to another, and it allows you to change hands or to transfer that value from one person to another. So it can be used as a means of exchange or used for payment or remittance in the same way that physical cash can be. And blockchain is useful as a technology because it's much more cost effective. So for example, if you live in certain countries in the world, for example, El Salvador, you may be paid in a currency which is not your home currency, and you may have to pay exchange fees plus currency fees, so FX charges to transfer that money back home to your family. If you transferred it in cryptocurrency directly to your family, the exchange costs are much cheaper, you don't pay the FX charges, and you save a great deal of money. So that's the benefit of using this technology, is it's cost effective. It's instantaneous as well, so the money can be transferred instantly in the same way that you wire money. It won't disappear for days, it will be received quickly. And it's transparent, so the ledgers are very clear. You can view them online if it's a public ledger. So it's very clear and apparent what's happening, so who's paying who or transferring value from one person to another. It's also secure, so it's very secure in terms of payments on the whole. And it's immutable, so it's a time-stamped and tamper-proof record which cannot be changed. And that's the benefit of blockchain technology. It can't be changed after the event. It is set in stone forever. So how does it work? So I'll show you a little diagram now. So just imagine like a spider's web. So like this picture here. This is a standard distributed ledger. So you have multiple different parties, all of whom have the same record of the same transactions. That's a distributed ledger. So here you have a particular transaction, transaction X. So money passing from one party to another party, but everybody in that transaction has the exact same record and the exact same information. So this is how blockchain transactions build out. So I'll just press the slides here so you can see the rest of the slide. So the way that blockchain builds is it builds in blocks which connect in a chain to form the blockchain, which is the record or the distributed ledger. So you always start with the Genesis block and then build on transactions from there. So you can't miss a transaction. You can't rewrite a transaction once it's formed part of the chain. It's immutable and it's there forever. And that's how blockchain transactions build. They build transaction to transaction. So they're all completely traceable and completely verifiable and immutable. So the chain forms from the Genesis block through as each transaction is added to the ledger. And everyone in that distributed ledger has an exact same copy of the truth. So what makes blockchain so special? Well, it's immutable, which is really helpful because of fraud and because of human error. Sometimes records can be changed or can be altered after the event, but with blockchain technology, they can't. So once they've been set in stone, they are formal. There's no central authority with distributed ledger technology. So for example, you can cut out the middlemen. So your market makers and your FX brokers, you don't need to pay all those extra charges and have all the middlemen actually facilitate the transactions for you. You can send money directly. So think, for example, PayPal, but not having to use the PayPal platform. You can actually just send the money directly. So I could send money directly to my family using blockchain technology without actually paying somebody in between a fee. Blockchain can be a public ledger, but it can also be a private ledger. And that's very important because from financial services perspective, quite a lot of organizations prefer to have private permissioned blockchains. So that has actually evolved somewhat since the technology first came to market. So cryptocurrencies and blockchains. Cryptocurrencies are an application of blockchain technology. They're a store of value or a means of payment and remittance. So you'll have heard about Bitcoin, you'll have heard about Ethereum, you'll have heard about Ripple, Zcash, Monero, all these different types of cryptocurrencies that have emerged. Some are more credible than others, but there are hundreds of different types of cryptocurrencies that are available. And they're effectively a means of exchange or payment, which can be used to pay one person to another or to add value from one person to another. Some of them are supported by a central bank. So if they're a central bank supported digital currency, they're underwritten by that central bank. But on the whole, cryptocurrencies don't have any underlying value. That's why people have moved into the digital asset space, so that the cryptocurrency or the particular asset is tethered to a commodity or a fiat currency or a basket of fiat currency, for example, so that there's always a floor or an underlying value to that asset. Because Bitcoin really only has a value in the market because people see that value and they perceive it to have value. So they transfer it from one party to another, but there's no underlying value. So if the value of Bitcoin fell to zero, there would be no comeback, there'd be no underwrite, and there would be no minimum floor value. So that's why the market is emerging into digital currencies and also emerging into digital assets, which are asset-backed. So that might be gold-backed assets, for example, or fiat currency-backed assets. So that's a really quick whistle-stop tour of what I could talk to you for absolutely days about, but I'll pass you to some of my colleagues now just to drill down to some of the more detail about what's actually happening globally around digital currencies and cryptocurrencies.
Great, thanks so much for that, Nicola. I mean, it's obviously it is a complex topic for most of us ordinary folk, but I think it was a very good description in terms of what is crypto, what is blockchain. Just one question from my side before we move over to Nicolas. You mentioned that there's lots of different providers of cryptocurrencies out there, which can also be confusing. But what's the main different? What are the main differences between the different providers?
Okay, so there are hundreds of different cryptocurrencies. So what I would say is, unless you understand this market, don't dabble in it yourself. Make sure you take advice and you work with people that actually do understand it, because there are lots and lots of different types of cryptocurrencies. So Ethereum is built in a completely different way to Bitcoin, for example. And some people choose to use alternate cryptocurrencies like Zcash and Monero because they're less traceable and you have more pseudonymity in using those currencies. So there are a plethora of different reasons why you would invest in certain cryptocurrencies over others. So it really depends upon your appetite to risk, your interest, what you're going to use them for, whether you're holding them as an investment or whether you're going to use them for a payment or remittance. A lot of it also depends upon the underlying technology, because there's not one standard form of blockchain technology. There are many, and interoperability of those different blockchain technologies is what makes the whole global system work. But we're still very early in terms of that interoperability and ability for blockchains to communicate with different blockchains. So what I would say is there are many, many different types of cryptocurrency, and they all have their pluses and their minuses. So do your homework and take advice before you dabble.
Yeah, thanks for that feedback. And Nicolas, we're going to bring you in now because, as Nicola was saying, even though it's early days, cryptocurrency has grown leaps and bounds, on primarily the reputation of it being a decentralized, unregulated financial instrument. But it seems like governments and central banks are waking up to the realities of this democratized currency with varying degrees of legislation. Nicola mentioned El Salvador as one example. I know you as a China expert have seen China has been one of the most demonstrative, with its recent ban on cryptocurrencies. So can you shed a bit more light on that in terms of the China position on crypto, and what that kind of thinking might mean for other governments as well?
Yeah, sure. We were having a bit of banter before this started about how China's attitude to it is that this whole idea of a cryptocurrency is a kind of anarchic and therefore somewhat dangerous. Before I carry on, I just noticed it says that Cryptocurrencies and Blockchain by Nicola McNeely. That's definitely not me. So Nicola, you might have to stop sharing the screen. Thank you. Yeah, because I don't want to be mistaken for an expert on crypto. As you heard from the introduction, I'm more of a China expert. My experience has been with financial transactions in China, where I worked for 16 years in Shanghai and Beijing. So yeah, I'm going to leap straight in with what was going to be the big reveal, but I think you all know, with China's cryptocurrency, which is that China's government declared all cryptocurrency transactions illegal on September the 24th this year, and banned Chinese citizens from working for crypto-related companies. And unusually for China, that has extraterritorial reach. So it's not just within China. I must say, when I first heard that announcement in September, I thought, oh, here we go again. China's always banning Bitcoin, and it doesn't mean anything. There's always a get around. There's lots of reasons for this more serious ban, not least the environmental impact of all those servers used for mining Bitcoin and Ethereum and so on. But you'd expect that China pulling out of cryptocurrency in September would weaken the price of Bitcoin, but it didn't. The price went up. And what's already happening is that the China aspects of cryptocurrency are moving offshore. And that was already happening. One of the important aspects of the Chinese economy is a large amount of it is hidden from regulation by all sorts of means, sometimes deliberately with government approval, but sometimes simply Chinese business people realizing that they need to find ways of keeping their currency offshore. So first of all, what is this migration that's happening? So the big Chinese miners of cryptocurrency will take their servers offshore and are doing so. And second, digital exchanges of the cryptocurrency and all those Chinese startups that were linked to the trade, they're all rebasing themselves offshore. I say all, many. And before they do that, of course, they've got to drop domestic customers from their list of customers. Otherwise, they'll be in trouble. Now, how do they do that? Well, again, in reality, of course, many of those big domestic customers, we're talking about the Chinese customers of the cryptocurrency companies in China, are also rebasing from overseas. And a lot of the time that is concerted. And if they haven't done so already in previous years, they are doing so now. They're shifting money by all sorts of means. We're going to talk a bit about China's closed currency. And I think that concept is going to be more familiar to Indian experts than to British and American experts. But what does all this show? I think, well, the fact that Chinese businesses are able to simply carry on up sticks and move overseas shows that virtual currencies can evade government regulation, even as aggressive and dictatorial a regime as China's, which really likes to enforce its policy on its citizens. And of course, that doesn't mean there isn't a great deal of risk or some risk attached to this. So one of the issuing authorities of the 24th of September ban was the Public Security Bureau. That's the police. There's not just some banking, finance type regulatory authority. These are the guys that knock on your door and cart you off. And they said that cryptocurrencies originating outside China will be treated as crimes. But that still hasn't deterred the movement of the business. So let's take a step back and look at China's use of cryptocurrency in the wider context. So cryptocurrencies first appeared in China round about the time of the global financial crisis. That's in 2008. And China's initial response was kind of ignore them. I mean, talking about the Chinese government, let's see what happens. But after 5 years, the banks took notice. They were the first to start issuing prohibitive regulations. That's around about 2013. And the way prohibitions work in China is on a sliding scale. You know, we think of it as very black and white, and you know, the Communist Party says do this, and everyone goes and does it. It's never like that. First declaration was that these, on a contractual basis, so from a contractual basis, Bitcoin currency transactions would be, and cryptocurrency generally, would be unenforceable. So the only penalty that you get is you've got no contractual basis for a claim. And then the next level up is when something is administratively unlawful. So in that case, the relevant authority can come in and just tell you to stop doing it. Again, still there's no fines at this stage. And then the fining is the next stage. And then you move on varying degrees of severity until it becomes what we've got now, which is a criminal offense in China and outside China. So why doesn't China like cryptocurrency? I think it was a difficult decision for Chinese regulators because there's always a debate within Chinese government bodies. Generally, as a policy matter, they like things that China is good at. And China got pretty good at cryptocurrency. And that gave it influence and then potentially more influence if cryptocurrency grows. China was the world's biggest Bitcoin miner, and they supported the largest exchange by volume. But the downsides were more serious because, first of all, if you have a semi-planned economy like China's, you want to be able to control currency. So you can control inflation or try to control inflation, interest rates, and so on. And that doesn't work well if you're dealing in a currency whose value you have no control over. Cryptocurrency is arguably not even a proper currency. Certainly this argument is made in China, and plenty in Britain say the same thing. Its values don't act like a currency. They fluctuate like the price of stock on a stock exchange. So it's more of a hybrid. I mean, the word currency is used in a revolutionary way, and you would have to extend the definition to cover what cryptocurrency is. And secondly, China argued that cryptocurrency facilitates money laundering, and they're right? By at least, they don't really mean money laundering as we understand it. They mean the avoidance of exchange rules, because basically in China, you can't convert and remit currency without approval. Cryptocurrency circumvents all that. You don't need to go through banks. And you certainly don't need to go through the State Administration of Foreign Exchange, which is China's regulatory body for that. And then thirdly, there's the environmental aspect we referred to before. Chinese central government didn't contribute much to COP26. You would think from some of the media commentary that China doesn't care about the environment. Chinese central government has been committed to trying to resolve its great contribution to world climate change. Have not so far been very successful, but they're certainly That is key part of national central government policy. All those mining servers really don't help. So what does that mean for everyone else? Singapore seems to have been the first destination for Chinese crypto people, the miners, the traders. And it was thought that at the time, this is back in early October, commentary that I read said, yeah, that's what they're going to do. They'll go to Singapore. They don't like Hong Kong because that's heavily regulated. So maybe a few other Asian destinations, but it's been far bigger than that. As of this week, both Russia, the United States have seen huge increases powered by the China migration, which is virtual in many cases. So these guys are still in China, or they have to be because of COVID, of course. We see a knock-on effect. So it's not just Singapore, cryptocurrency being instantly transferable. We're seeing Amsterdam and Frankfurt have been openly trying to bring in some of that Chinese talent, and particularly the mining. And these locations are quite happy to profit from crypto experts without really taking much risk. So I think that's the short-term effect of the China ban. But ultimately, we're in the infancy of cryptocurrency. Ordinary currency has been going on for millennia. This is new. And if, as I believe, cryptocurrency does suffer a significant problem, not just the little blip or correction that we saw a couple of years ago, but something much more serious, the equivalent of a South Seas bubble or tulip bubble, people lose money on a large scale, which you would assume will eventually happen. We can then see a great deal more interest in China's restrictive measures than is being shown at the moment. And that's all I've got to say.
Great. I think that's a good point in which to bring Kavisha, because obviously you mentioned China came in very hard, one of the first governments to come in really hard on, cryptocurrency, the ban, etc. Yesterday, Kavisha, we saw, that matter coming very much closer to home when it comes to cryptocurrency. The Indian government, has previously been giving conflicting indications from adopting a laissez-faire attitude to now, yesterday we saw in the press that they're now proposing to introduce a bill in this winter's session, effectively banning private cryptocurrency, moving on the kind of China trail. So what do you expect the future of cryptocurrency to be in India then?
So, crypto, the entire legislation, the RBI has been issuing warnings right from 2013. They've had a very conservative approach towards cryptocurrency, especially like Nicola said, it's not underwritten. People are very uninformed in our country while investing in a cryptocurrency. With over 6,000 cryptocurrencies that people can trade in, it's more like the price fluctuations aren't something that can be controlled. And the fact, so while RBI issued the circular in 2018, effectively banning all sorts of banks from dealing with anyone who's trading in cryptocurrency, the Supreme Court has very wisely stated that the RBI is well within its powers to regulate the currency. However, so long as there is no financial loss or an actual loss to any other financial regulator, for example, banks or any other person who is registered with the RBI. So what they propose to do with this new bill is to regulate the trading, to introduce crypto. So while they will, the government has now at least proposed to introduce their own digital currency, what they will also do is treat cryptocurrency in India as a crypto asset, as is loosely defined. And the moment you call it an asset, it will ban them as legal tender. So you can't buy or sell crypto in exchange of, like a Bitcoin in exchange of any particular product. You can't pay for any services in crypto in a Bitcoin. What we also have to address in this bill, the regulatory bill that's going to come forward, was how the government wants to introduce its own currency. And with this full yesterday's publishing of that they'll ban all private currencies, defining the private currency is going to be private cryptocurrencies is going to be something that we have to look forward to.
Okay, and with this new regulation that looks like coming in, very soon, how is that going to, affect investors and trading platforms, such as BuyUcoin, the IDEX, especially given, I think, India is meant to be one of the largest, if not the largest, trading hub for individual investors in cryptocurrency. So it sounds like it could be, quite a significant move by the government.
So platforms like IDEX, Coin, they are running through, they have their own regulations when you're trading. For example, when I want to buy, say, a Bitcoin, I can have my own, I can punch in an order, say I can sell it at, say, X rupees, and I can go off to sleep. But now with the Indian government trying to regulate it, there will be trading hours in place. There will be a lot of regulations. There will be special accounts that any investor will have to maintain. But the platforms like IDEX, etc., will have to be actually registered with either the RBI or what we have for a securities exchange board in India. So what you're looking at is treating cryptocurrencies like Bitcoins and Ether at par with securities. So you will have to, while they'll be transferable, they'll be looked at as movable assets. But the cryptocurrencies, every exchange, every all these regulatory platforms will have to be registered with the government. So the government can basically track every transaction that you're making. So every buying and selling is then reported, which will eventually also, have a tax implication. What the government will then propose to do is levy tax on every buying and selling that happens. What it also means is that you will also, recently India at least has seen hundreds of startups in crypto, which includes having crypto SIPs and mutual funds, also trying to introduce NFTs. The government will possibly have advisory, even to be an advisor for crypto, you'll have to be registered with this regulatory body, which is possibly going to be established. What you also have to look at is the government is now going to, in all effect, once it's classified as an asset, it may ineffectively ban certain currencies, which have no underwriting, which absolutely have no basis for price fluctuation, because the major concern for any investor is going to be how does the government regulate the price fluctuations, because it's not a centralized currency. So,
yeah. So then, what do you think, could be some of the challenges that individuals face, with regards to these new regulations and the kind of clamping down that we're going to see from the government?
One of the major impacts is going to be taxation. So far, it's been, and the first major move was in March 2021, when the Ministry of Corporate Affairs asked all the companies to declare all their crypto assets or any dealings that they made in crypto. It could be looked at as a positive as well as a negative approach, because that means that yes, they will consider any cryptocurrency held by any company or an individual an asset. But what it also means is then what the question comes is that it is going to be heavily taxed. What if I want to transfer my one Bitcoin from my wallet to another person's wallet? There will be a separate transaction if it's treated as a movable asset, which means that it's going to be governed by a Contract Act, by a Transfer of Property Act, because it's then going to become an asset, which I can legally transfer from X individual to Y.
Yeah.
I will also be allowed to bequeath it to, say, as to my children as an asset. It can be inherited. So how do you tax something which an asset? So you will have stamp duty implications the moment you transfer an asset. So there's going to be a lot of regulatory changes, not just through the bill, but also to several acts. We've got GST in place. So we've got GST implications, we'll have income tax implications, we'll have various tax implications, which is going to be a major concern.
Okay. I think it, and then I guess there's those same kind of implications would then be transferred onto a business level as well. So whatever
True.
individual doing, those same kind of tax issues, GST issues, transparency, balance would then transfer to a larger level for corporate who are.
So you can't, if they'll effectively ban, the major problem for businesses in India is going to be in 2021, we saw companies like the Rickerbys accepting Bitcoins and several other cryptocurrencies as payment, which means effectively all these companies, the moment this legislation comes into place, cannot anymore accept any cryptocurrency as modes of legal tender. So that's going to be a major fallout for any businesses who are looking to go, makes payment simplified. Also, one of the other concerns is going to be that once crypto comes in, once digital payments come in, how does one how does an individual make this transfer to the company? So there's going to be several tax implications. You'll have problems of how do you identify these payments. The government is not going to look into it anymore. The government is not going to let you make these payments.
Yeah. I think it's pretty good time to bring Nicola and Nicolas back in, because it sounds like it's going to have a huge implication on the whole point of Bitcoin and cryptocurrency, that the original reason for it being invented, as a kind of democratized, unregulated asset, not even asset, but unregulated. If the government's going to transfer it and make it a kind of more financial asset, it will have kind of long-term, potentially long-term impacts. But I think what Nicolas was saying earlier is that China so far isn't seeing the same kind of impact that it wanted to from a government point of view.
So, another concern is going to be like in India, there is the Central Board of Secondary Education, and we got the state of Maharashtra, which is using blockchain technology to ensure that they're issuing tamper-free certificates to students. Another concern is a lot of these technologies will accept payments only in cryptocurrency. So if you effectively ban the currency, how does the government itself make payments to these technologies, to users of these technologies?
Yeah. Nicola, are you seeing any of these kind of issues in other markets? Obviously, you've been working in this field a while, and governments have been trying to figure out, like I said, it's still very early days, but I think from a government point of view, it's very, very early days trying to figure out how to manage the challenge of cryptocurrency. So are you seeing these kind of dilemmas also coming up? And
absolutely, I think it's a huge issue because there's no global standard for crypto regulation, and all regulators are trying to collaborate or to discuss how they should regulate this globally, because it is a global market, and there are so many different factors which impact how you regulate and how you deal with the legal framework around issuing these cryptocurrencies and controlling and regulating all of that. So yes, we certainly are, but I suppose it's a more acute issue in countries where cryptocurrencies have been banned, because you need to look at the specific terms of the legal situation and also the regulatory position in that territory to see what is and isn't permitted and how it can or can't work. So I suppose we see it from the other side, in that we see exchanges and platforms operating in territories where they're quite regulatory light. So that might be Estonia, that might be Cayman Islands, that might be Jersey, Guernsey, tax efficient territories where the regulation of these cryptocurrencies and crypto assets they are regulated, but the regulators are more open-minded to working with businesses that are exploring these technologies. So your traditional governments, like US, for example, the SEC, are probably one of the most difficult territories in which to actually operate or run a blockchain business. So it does very much depend on where the investor's based, where the business is based, where they're operating, who they're selling to, what they're selling, how they put the proposition together. So are they selling digital assets? Are they selling cryptocurrency? Are they selling underlying technology that has nothing to do with crypto assets or cryptocurrency, and looking at it on a case-by-case basis? But it literally can turn on a pinhead as to whether something's regulated or unregulated, or whether it falls within the regulatory regime in an unintended way. So sometimes, for example, people can get caught by the wider financial services regulatory regimes in different territories unintendedly. So yeah, we're certainly seeing issues being raised all the time about how businesses can expand and how they can operate globally. But what we're tending to do is work with people on a territory by territory basis. So if they want to operate globally, we get the legal and compliance and regulatory advice in place for each territory on a territory by territory basis, and then just monitor it and maintain it. Because as the legal and regulatory position changes in those territories, it also has an impact across other territories too. So it's a changing landscape. It's like trying to pin jelly to a wall at the moment. It's really tough.
Yeah. Kavisha and Nicolas, if you put your cameras back on as well, we can have more of a panel discussion. But Nicolas, given, I mean, it's only a couple of months ago that China banned. It looks like India's taking a similar kind of stance in terms of trying to, well, not completely ban it, but looking at how do they essentially control it and raise tax revenues. Any lessons you could start seeing? I mean, it's only a couple of months, but any lessons you can start seeing where the Indian regulator or Indian businesses might get stuck?
The first, I think from a regulator's point of view, is a massive challenge, because if in a country like China, which has a strong track record of punishing people pretty severely for doing stuff it doesn't like, you nevertheless still get people quite happily transferring their businesses offshore, even mining, which actually isn't completely virtual, because obviously you need the servers. But the control of it can be exercised from overseas, from within China. So given that, I don't see how India, which is a freer society, and therefore it's more difficult to enforce central diktats, can police it. And so I suppose that's perhaps why they've gone for a lighter touch and focused more on regulating. So let people carry on in your own country, but regulate them. Whereas what China's done, which is to scare all the talent overseas. That was one aspect. But the other, I think, even more important than that, which might have global consequences, is that people do take notice of what China says and thinks now economically. It's 20 years ago, it was considered, not necessarily a front of house player. But now with its enormous economy and the fact that people recognize talent in managing that economy, I think people in the United States and in the EU and so on will take seriously what China says and thinks about the negative consequences of using cryptocurrency, because it is an unregulated field. And it's all very well saying, but the basis to it is something rock solid and blockchain is unchallengeable. But ultimately, that's not what drives the value. What drives the value is, in fact, clueless investor mentality, in the same way you would get in an infant stock market, where you get ordinary people who just decide to put savings into it. And that has as much effect on the valuation as the more advised, the Goldman Sachses of this world, who everyone respects. So with that, you can see why I think China may well be respected for taking the view that this is an extremely dangerous way to run the monetary side of an economy, and therefore they've come down with this blanket ban. And that's why I was saying, if something goes wrong and people are affected adversely, you can see popular support for restrictive legislation of China's type.
And how are businesses dealing with it? I know you said a lot of it is moving offshore, but like Kavisha mentioned, businesses already in India using blockchain and crypto to kind of do business with each other. So,
yeah.
But what has that meant for China, so that we can see if there's any lessons for the Indian corporate houses? Well,
again, that's the fascinating contradiction that China creates for itself by trying to ban everything, because they're not banning blockchain related diligence or all the other things where blockchain is effectively a crucial part of any functioning world-class economy. China's not trying to ban that, and why would they? That would make no sense. So therefore, you have the other crypto trades that are allowed to happen. And someone mentioned the non-fungible assets, the media things. That actually started in China before it started in the United States, the idea that you could buy a meme. Well, that's a similar thing. So that's not being banned. Virtual transactions are also not banned. So with that, again, how do you enforce it? I think you enforce it by locking people up. And I can see China doing that eventually. So that's the risk for Chinese businesses. I don't really think that there's something for Indian businesses to learn from it.
Yeah, I mean, Kavisha, also it's very new in terms of, it's only just been announced yesterday. There's no kind of preview of what the government's thinking or what it's going to look like for a while. What would you be starting to advise your businesses, businesses that you advise? What's the kind of sentiment you would be throwing out to them at the moment?
Till the time we've not had a look at the bill, let's not burn our hands into something, because we don't know. While India has so far always had a very cautionary approach, we're not very pro using bitcoins and Ether or any other cryptocurrency as legal tender. They are also going to try and promote their own digital currency. So it's till the time we've not had a look at the bill, the crucial aspect would be to see how they define cryptocurrency. Whether you define it as an asset or whether you're defining it as a legal tender, is going to be a complete ban.
Right. Cool. Nicola, I know you've been very busy answering everyone's questions, which I think were very highly technical ones. Anything you want to add over and above, or any questions you want to pull out so the wider audience can get a grasp of, what are the key technical ones that they need to understand.
So can people actually access the question Q&A so they can see what I've been putting in? Okay, fine. So there have been some interesting questions. What the first one was around the difference between what is a private cryptocurrency. Does it mean it's non-government issued, so it's not central bank supported, or does it mean it's not using a public ledger? And in truth, it could be either. It just depends how it's been built out and how it's been being used. So I would just look at what it actually is and how it operates to determine what it means. It could be either. There's a great point about tether. So, anyone in the crypto market has known since God, I would say probably about 2015 that tether isn't properly backed by fiat or by the US dollar, USDC. So I think, tether is it personally, I think tether is a huge scandal, and I think it's not terribly reliable, and that's why there's been such an emergence in terms of digital asset backed cryptocurrencies that are tethered to dollar or pound to pound or yen to yen to your physical currency, or to a commodity that has a physical value. So it's a great point. I think, tether is one of the biggest scandals of the crypto market. Then there's some points about exchanges. So how are they regulated? Well, they're normally regulated in their home territory, but also the core territories in which they operate, and they have to have certain permissions to operate as an exchange or a platform. Then we had another question about on NFTs, which is great. So I do an awful lot of work in NFTs, and NFTs are non-fungible tokens. So they are unique assets which are attributable either to a piece of art, or it could be a piece of fashion. It could be an avatar, so a digital avatar that you'd use in the metaverse for gaming or for entertainment, for example. And the question is about would Indian regulation on crypto have an impact on the NFT market, particularly if the websites you can only use cryptocurrency. And it's an important point, because if you're buying an NFT as an investment and you're using cryptocurrency or fiat either, it would generally be covered by regulation, but it does depend on the laws of the territory in which the platform operates that's selling the NFT, and also the terms of business, because it depends where they're trading from, and also where the investor is tax resident. So there are a whole host of things that you need to look at from that perspective. But in America, for example, there are certain restrictions to stop US investors participating in certain projects that are in the crypto space, but people still do it. They just do it offshore. So there's always ways and means to get around these regulations, unfortunately. And then there was some points about regulation generally and what is or isn't regulated. And I guess my comment there was that the difficulty is all regulators see things slightly differently. So you do have to look on a territory by territory basis as to what the regulator's position actually is, because it can be very different. And then a great question about Dogecoin. And I mean, I don't really rate Dogecoin. I don't really think there's much value to it, and there is no scarcity with Dogecoin because they can just be minted ad infinitum, whereas Bitcoin does have a finite number of Bitcoin that can never be mined. So scarcity is a part of Bitcoin, and owning Bitcoin in itself it creates that bull market and that interest in purchasing Bitcoin. So I think that Bitcoin will always exist and there's value in that, but it's a personal view. So that's kind of where I got to. I think we've got some more questions that have come in at the bottom. There's one for Nicolas. Have you seen that one, Nicolas?
There's one about the Evergrande meltdown, and
yes,
resulted in China making this conservative move.
Yeah, I had replied to that, but I don't think the Evergrande meltdown. I do think that that's distinct. Evergrande is a traditional real estate speculator, among other things, and China was aware of the real estate speculation problem good 10, 15 years ago. They have good mechanisms in place, probably rather better than in Western economies and in India too. whereas crypto, totally distinct thing, and that's been earmarked as something that needs to be restricted since 2013. I suppose they're related holistically. If you're worried about the economy generally, then it's the same bunch of guys that try and restrict what you do.
Pretty much. Yeah, I think we've pretty much covered all the Q&A. Great. I think unless there's any last kind of thoughts from each of the panelists, Nicolas, from you.
Well, I keep saying the same thing, but I think it's just worth mentioning that China's regulatory stance, if copied by other regimes, would make it much harder for all those, and China being a market leader in mining and in the startups that actually make money from the advisory. If other countries follow suit, then where will those guys go? So it's all very well saying, oh, you can just move offshore, move somewhere else. Well, where are you going to move ultimately, unless you're going to restrict that to a smaller and smaller group of rebellious countries, unless things go in totally other direction and China eventually changes its mind and think, oh, we've seen other countries, Ukraine and so on, they're using Bitcoin as an actual currency that's legal tender. Therefore, we've changed our minds and we were wrong. But China pretty much never does that.
No. So do you think it's still a wait and see for other governments, or you think they will kind of look at maybe doing a hybrid, what India's done in terms of more regulatory rather than banning? And what's your kind of gut feeling around that? Yeah,
well, I think Nicola is probably better able to comment because this relates to the rest of the world. Sorry,
sure, no problem. So, so just to be clear, I'm not a regulatory lawyer, I'm a technology lawyer, but unfortunately, because my clients do an awful lot of work in this space, it does mean that I have to operate with my regulatory team to navigate the regulatory position. And what I would say is that I think some of the regulators are actually trying to find a middle ground. I think the biggest challenge, in all honesty, is they don't understand the technology. So I think the market is moving 10 times faster than the regulators, and as is the same with the legal system. New technologies are emerging faster than they can actually get to understand them, never mind regulate them and legislate them. So that's where the complexities are. But through things like sandbox schemes, just basically the regulators employing people who operate in the industry, they're trying to upskill really quickly so that they can better understand the opportunities for economic growth. Because unless governments understand properly this market, they're going to miss out hugely on potential economic growth, because this is a market that's going to stay. It's not going to go away. It just needs to be knocked into shape, really, and to find some sort of global standard in terms of regulation, how it's going to work and operate. There will be winners and losers at the moment, because some people are taking a more restricted view, others are taking a much more lenient view. We can see that the blockchain crypto markets are moving to more favorable territories, and that's, those countries are gaining as a result. So it'll be interesting to see who the losers and the winners are. But I think hopefully we will before long get to a position where there's at least some sort of international standard, so we have a better understanding as to how things will be treated across the world, rather than having to go piecemeal at the moment, which is really, really painful.
Kavisha, obviously it's still very early days, and but if you could, like what Nicola said, there'll be winners and losers, and it really depends on what the government ends up regulating, or the kind of legislation they put in place. But if you could advise the government, or if you could, if we could put like a viewpoint of, look, this would be sensible practice, so that we don't do what has happened in China, where you drive a lot of it offshore. It's still continuing, and like I said, price is still going up, so that their policy hasn't kind of maybe worked initially as they would have liked to. And what kind of advice, or what would you like to see coming out of the India kind of regulation?
So what I'm hoping to see is a very balanced regulation, where to ensure that there's a lot of awareness of people knowing what they're investing in. You treat most of the cryptocurrencies as an asset, so you can continue buying and selling, which is regulated, which is monitored. So a lot of concerns of countries like India, which with respect to money laundering, can take care of. But also we have to, with the Web3 being spoken about and India being right there, we have to think about making exceptions to certain currencies, which not being used as legal tender but can be legally held. and be used for a particular purposes or in specific industries to ensure that there is no hurdle in the development in terms of our web, where other countries are progressing. You don't want to be the last one.
Yeah, okay. Well, as you said before, it's a wait and see game for India, and I think a wait and see game for other kind of markets as they're going to see how it plays out, you know, in China, India, etc. I want to thank you to all the panelists. I mean, that hour's gone very quick, and you know, it has kind of helped break down some of the kind of technical aspects of, you know, blockchain, crypto, Bitcoin, and digital currency. So thank you, Kavisha. Thank you, Nicolas, for an illuminating session. You know, on what sometimes feels like it's a next gen conversation, rather than, you know, and but we've got to deal with that conversation today. So thank you also to the attendees for tuning in and asking thoughtful questions to help clarify some of the grey areas around cryptocurrency. We'll be circulating today's session to each of you post the event to share with your teams, and we'll also connect with you to our panelists, you know, to discuss some of the changes and strategies for your businesses, you know, in one-to-one conversations later. Good evening, everyone.
Thank you.
Thank you.